tracking some breaking news out of the United States and a bold move by the U.S. Federal Reserve, where they have decided to cut interest rates by a full half point. There was a lot of speculation to be a quarter, but in fact, it is a half point. CTV's Renee Rodgers is standing by in our national newsroom with more. We knew a cut was coming, but not necessarily half a cut, Renee.
That's right, Todd. This does mark a significant shift for what is really the world's largest economy. The Federal Reserve has cut its key lending rate by an aggressive half point. As you said, a lot of economists were expecting the rate to be cut, but whether it was going to be by 25 basis points or 50, that was the argument. Well, we now know that it has been cut by a half a point. And it's the first of what is expected to be a series of rate cuts after the bank brought up the policy rate to tamp down inflation, obviously brought on by the pandemic. Now, it does make sense that this cut has come, Todd, because the Federal Reserve looks at two things when it decides whether to cut the interest rate or raise it, and those things are inflation and unemployment. Well, inflation fell to a three-year low in August, close to the Fed's 2% target, fell to about 2.5%. And over the last year, unemployment has ticked up in the U.S. That created a recipe for a cut today, Todd. And we're expecting to hear more from the Fed Chair, Jerome Powell, in about half an hour's time when he'll explain what more went into this decision. Right.
So a clear sign that the Fed now believes, Renee, that they are winning the battle against inflation, but it's now about protecting jobs. What about the impact here in Canada?
Yes. So this could certainly have what you'd call an indirect impact here in Canada on mortgage rates. And that is because essentially economists say that this cut today in the U.S. will spur the Bank of Canada on to make further cuts to its interest rate. This is the first cut that the U.S. has made in a series of cuts, but the Bank of Canada already started cutting. It's actually made its third cut earlier this month. But the whole thing is it doesn't want to get too far away from the Federal Reserve. If it does, if there's too much of a discrepancy there, that could weaken the Canadian dollar. So this does pave the way for the Bank of Canada to be able to make further cuts, possibly more aggressive cuts. The next Bank of Canada interest rate announcement is coming on October 23rd. So we will see if today's cut south of the border has any effect on what could happen here in October.
Yeah, well said. Thanks, Renee.
Thank you.